Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Tuesday, the 10th of February, 2026. A lot of volatility came out of these markets. You're now getting into way more normal type of trading in different parts of the markets that had been on fire and almost uncontrollable. It is a Tuesday. We've had a Friday and a Monday that were up in the stock indices, so you gave back a little bit. But the market that didn't was the Dow. The other indices certainly tried to give back, and they did do so. When we take a look for tomorrow morning, and we'll come back to that page in a minute, you're going to get the Mortgage Bankers Association, the indexes. You're going to get a big one. The non-farm payroll data comes out tomorrow, the jobs report, if you will. They're expecting 55,000 jobs compared to December's 50, so very much in line. The jobless rate's expected to hold at 4.4%, and the average hourly earnings up 0.3% month over month, and up 3.7% year over year. And if you'll notice, there's not a lot of fanfare about this. You're not getting, oh, this is going to be a big report and all that. So, interesting time. We're going to get Casey, Federal Reserve Bank President Schmidt tomorrow. He's going to be talking at a forum. Federal Reserve Governor Bowman will speak at 9:15. And you'll get the all-important EIA weekly stocks report. We also had a lot of earnings. If you were looking, Ford had its earnings out today. You had earnings on a number of companies as they're coming through. And we're starting to watch the banks give up a little bit of their ground. I found that interesting today as well. So let's go back to this page and take a look at what we've got. Goldman was up today, but as you'll see, the financial arena, the ETF gave up. Look at how much Lilly came down today, $20. And this is after the deal where they've gotten their, if you will, hims and hers done in the sense that there's a lawsuit pursuing them, and they will see what goes on with these compounders. NVDA couldn't hold the gain back into the 190s today. Apple gave up a little bit of ground, as did the Amazon. When I come over here to IGV, it appears that a lot of people are noticing what I've noticed. In fact, I noticed it because I heard a lot of other people talking about it, just how beat up the software shares are. And I was watching today, as you know, they have the roundtables on CNBC. A lot of talk there, a lot of people trying to catch a falling knife. We do have some interesting work in it. Now, let me show you what I mean. When you look at the swing line, you have the pattern of lower highs, lower lows. You've been with that for a while. The bear trend is alive and well. The market is underneath the 18-day average. You had a bearish crossover where the 18 right here got underneath the 200, and the market literally let go. So on a bounce, one of the areas that I'd look for, if it has legs to it, would be to get to 91.76, but that number will drop each day as the 18-day average will drop off one of these numbers and replace it with the current trade of the moment, and that'll drop that average. When you look at the Bollinger Bands, you ran it. And now you've moved away from it, as I pointed out yesterday, so you're getting a bit of a bounce. But this is what's got my attention. The market lost its bearish embedded reading. Now, the only time you can get it back and get both numbers to say, that was just a trap for the bulls, is with the very next day. It's got to have both under it. If it doesn't, c'est la vie. But I think what happened today, with the market like it is, and I said that, I think that you're getting buyers coming in. I think they'll have stops under 79.27, and I think they're trying to see if they can get that market to get up to that moving average. That's what I'm expecting is happening. When we look at Caterpillar, it might be ready to roll over a little bit into the Bollinger Band area, but it's part of the Dow, and that's been acting superior, and you've got now an embedded reading at work. So on pullbacks, I do expect this market to be well bid. Hershey, how sweet it is. The cocoa prices have helped this market, I guess, in some way. We don't have that cocoa scare we had, and they're probably making money by making smaller bars. But in any case, it really came alive, and again, in embedded reading. So there's nothing bearish at this part of the market. In Apple, the market came down. Now, if it loses its bullish embedded reading tomorrow, out you go, because you're probably coming into the 265, 261 area. But until that happens, I expect you're getting buying on this pullback, and traders want to see, can you get all the way back up and make a run for that higher high area. When we take a look at energy transfer, I do think this market is now trying to bottom out. We don't have a signal it's done it, but we have a pretty good inkling. Lower highs, lower lows, right into the support of the 18-day average when you had lost the bullish embedded reading. That was the setup that I'm just showing you right now in IGV. It's the flip-flop of it. And now, unless this market wants to get back up here, I just think you're going to churn a little bit and try to set up another buy signal in the market. When we look at Alphabet, still under the selling pressure of the market, lower highs, lower lows, under the 18-day average, and momentum going down. Not the place to be. Rivian. Rivian lost its bullish embedded reading. And again, let's see if I can get that to come in. I can show you this. If you take my enhanced Bollinger Band course, it's right on the website. You can see right here, here's the next day, you lose the embedded reading. You can see the reading here, 2139. So unless you go right back for that low, price will, it should, doesn't have to, but it should make a run to the closest main moving average. Right now it's the 18-day in red. You can see where it's at. This is now what you're doing, and bingo. And that's where I think the big boys took their money off the table and walk away. Now there's a way to work with that. You got to get my formula for slow stochastics. They're different than yours. When you look at Joby Aviation, same thing. You're flirting. The word is flirting with trying to get some momentum up here. Haven't done it. So each of these rallies is getting sold, in my opinion, as the market has to lose its embedded reading to give us an idea that it's anything more than just a bounce in a bear market. This is what I was talking about with the big banks, because XLF covers a lot of that. And you can see how the market is just slipping and sliding. Now the last break low here was at 18. Today you took it out. That's 53.18. So I should have a red arrow right here saying that you've got a lower low, higher high. You stepped out of the uptrend. On the industrial sector, well, if you're looking at the Dow, you know pretty much what's going on, and you keep running into this Bollinger Band. You have the Gorilla Glue trade, and that often forces the market to embed, which it has, which tells me on good breaks until that reading loses by getting under 80. Actually, I use 79. Until it closes under 79, I think the pullbacks in the market are still buying opportunities. XLE, in terms of momentum, you have the embedded reading, no change. I wouldn't step in front of energy for anything. Did you hear the president today, our president? He's thinking of sending a second carrier group to the Middle East. So he expects to have a meeting next week with Iran, not obviously him, but through their intermediary. It's a crazy thing. They go to some place, there's rooms. The Iranians don't want to see the Americans. And through an intermediary, they talk for whatever they talk. Then they get back to their cohorts, I guess, in Iran. They come back and they talk a little bit more, but nothing's happening. And all we've heard is that we are the people, we, the United States, are not to be trusted. We're a lot of things. Well, we're not the ones trying to develop a nuclear weapon. We haven't. I don't recall since World War II that it's being used for anything. And number three, we don't threaten countries with it. I think they would threaten everybody with it if they had it. So I'm not buying into that mode whatsoever. So I think the president will run out of steam on this probably next week or the week after. And I think that's why he's talking the carrier group. For all we know, he's ordered it there already. You know, you never know what they're going to do. I love that our president is smart enough to not tell you what he's going to do. He plants a seed and he'll let you run with it. Higher lows, higher highs in the gold, still looking to me good. I expect to see support at 454 if the market pulls back there. When we look at Walmart, Just take a look at how this is now finally backing off, pulling away from the Bollinger Band, and at the same time losing its bullish embedded reading all today. So unless this market immediately goes back up for that high, the odds favor the price and the 18-day average are going to make an attempt to come together in some manner. I don't know if the 18-day average is going to run to that, or price will break to it, or they do a little bit of both, but that's what I'm expecting. In Microsoft, you got back up and over the last rally high, and you're on the verge, you're not there, of losing the bearish embedded reading. So some of these that are getting beaten up, some of these software companies, pay attention. That's why you're hearing people talk about it. I don't know what got into BND, but it ran today, you know, the 10-year notes back to the 415 area, but I expected that going into a jobs report. You've now gone from the upper Bollinger Band to the lower band, made a run back up, fell to the lower band again in that double bottom area, and now you've run up to the double top area. It's a very confusing chart, and it's all momentum. I mean, it's making you do the wrong things. It's making you sell the Bollinger Band and then buy it. I'll let somebody else want to play that game. It generally doesn't end up well. When you do the UUP and you take a look at the dollar, higher highs, lower lows. Again, I think this market is topped. I am in the bear camp on the dollar. I'm looking for resistance at 26.96. If given the opportunity there, I think the pros will hit it. And at the same time, I think they're going to try to buy FXE. Now, it's not smart to be in both. And the reason is that the dollar index, which UUP is based on in a major fashion, is 57% comprised of FXE. So you trade one or the other, not both, and you figure out which one you think the pattern's better on. So I'm Ira Epstein. I appreciate you watching this. Question: do you have anything you want me to cover in the different markets? Write me. Every 2-3 days I take a look and I will rotate the stocks and get one of them in if it makes sense for me to do that. All right. Some of you give me some crazy things and I'm just not going to do those. Not interested in double and triple ETFs and all that. Single stock futures. I should have mentioned this. The CME group announced that they're bringing them back. They failed the first time. I don't see why they'd succeed the second time. But they want to bring them back on 50 different stocks and let people, if they want to trade the futures and not buy the shares, do so. You know, it is margin-wise typically 80-90% margin without interest payment. Maybe that'll do it this time. I have my doubts. Somebody's got an idea and I just don't see it working. It flopped miserably the first time, and the regulations on it for brokers were insane. You basically had to go like you were getting your Series 7 and 3 all at the same time. In any case, I'm Ira Epstein. Look for all these developments. Remember, you can click up here at any point to get to our website and get into the research area. You see me doing this, or take the course on the enhanced Bollinger Bands. You can click right up there. It'll take you right to that course.